It's the hydration stand. Have you seen the hydration stand out there? It's really, really lovely. It's actually very palatable. So I was at Mincor downing my third Mars bar for the day for a bit of energy because I was feeling a bit flat because we're a bit busy, quite frankly, with this conference. And Tim said, try this. It's a better carbohydrate, slow release. It'll make you feel better. So we'll see how I feel in 25 minutes. My theory with chocolate is that if you just, they say you peak at 20 minutes and then you crash. I just eat another chocolate at 20 minutes, and that seems to stave off that particular problem. I also went around to Gallagher, and since we're not completely packed in the room now, I'll give you all the heads up. So Gallagher has got, obviously they're sponsoring drinks for us this afternoon, and my apologies to those of you who are playing along online at home, but Gallagher is sponsoring our post-conference drinks today. So they'll be held in the atrium outside. Bushy and his colleagues will be out there. You know that Gallagher is involved, obviously, in insurance, not just in the mining industry, but also in home insurance as well. So if you need something like that, have a chat to Bushy at the same time as you grab your business card or one of theirs and stick it on the game that they're playing out there. So there's the chance to win a $500 voucher to Crown. Use it however you want at Crown. That's up to you. But it's a voucher for $500. And they've got a game, it's called Discover the Resource. And the geos in the room, all your knowledge is going to be of absolutely no help to you. It is all pure luck. They've got a little spot behind something somewhere. So you put your business card on where you think on the grid the resource is going to pop up and you could win $500. I did ask if you had to be here this afternoon at 5:45. And Bushy reckons he's nice in that, but I'm going to wrestle with him about that because I reckon you should be here because we'd like to see the elation in your face. And if not, we'd like to see someone who actually wins it. It's more fun that way. All right. How are we going? We've got 11:19, so we're running 4 minutes just behind, but that's okay because we can make that up when we like a bit of a chat. So our first presenter in this session, session number 2, and it's only going for an hour and a half this session before we have lunch at 1. 13 years ago, Christian Easterday was in Chile. He was wandering around. He was exploring for uranium, and instead he found what he reckons could be his and potentially our early retirement fund. It wasn't uranium, was it, Christian? No, it was something else. Why don't you come up here? We want to listen to what you have to say about Hot Chili. That's the little company that you listed back in 2010. So it's not lithium, but copper. That is the focus of Hot Chili and their Cosfuego project, which is in the north of Chile, in the Atacama region of Chile. So Christian's been building this project now for, where'd you go to? For more than a decade, haven't you? And there's a saying I know that you and your team have, and it is timing is everything. And I think right now, as we all know, as we all heard, copper is a pretty big hit. So let's see if this could potentially be part of our retirement and investment plan. Would you please make Christian very welcome, everyone?
Well, thank you very much. That was quite an introduction, a bit of a step back in time for us all. So I'm very, very pleased to be back here at the RIU Explorers Conference, a fantastic opportunity to always to give an update on the continuing growth of a very large scale now coastal copper hub in northern Chile. I guess there's a bit of housekeeping firstly to attend to. Today I won't be giving the company's first 3D presentation. We've just recently announced that, put it on our website for all shareholders, investors, and anyone interested to really get your hands into our models and data and have that transparency and visibility that all of the Canadian companies enjoy through a platform called Verify. So my first prediction is that within 2 years, 80 to 90% of the companies that are exhibiting here will have Verify and have that capability for people to interrogate the resources and the investment proposition of each of the companies. So at 1:30 today, we're taking a virtual site tour of our projects, Costa Fuego, and I invite you all along to our booth. Our team will be walking through that from 1:30 at the end of lunch, and no safety hard hats or safety boots required. So I'm going to now just talk about quite a significant pivot towards growth that the company has just announced following a major consolidation step at the end of last year. But firstly, I'd like to talk about copper. And just very briefly, it is the critical metal of the future. The world's decarbonisation push and the electrification of everything does not occur without this key commodity. And in fact, I think that what you're seeing in copper today is very similar commodity thematic going on with iron ore in the early 2000s, or what happened to lithium in the late 2016, 2017. Both commodity classes sitting in front of a structural demand shift with the inelastic inability to produce supply quickly, capital intensive, time intensive sector of the resources space. And what transformed the iron ore price to 10 times and made everyone in Australia an expert at the time in iron ore, from a commodity that they valued little more than asphalt for putting on our roads. That 10 times re-rate in the price of iron ore drove eventually the demand that is powering the world forward. And lithium is certainly where the puck is at the moment. But I would contend that copper is going to be where the shift of dollars in the resource sector will go. Recently with Wood Mackenzie, we would have seen the estimated capital spend that's required in the future-facing metals. There was a mountain of difference between everyone else and copper. And it's because there are no large-scale copper supply available in the next 10 years. Even if we could produce 10 million tonnes of extra copper a year, it's going to be very difficult. So those are the preconditions for what we believe is the key investment theme in copper. And if that's the key investment theme and we're seeing a change in Australia, with Australia about to lose Oz Minerals and $9 billion or so about to wash back into the Australian market looking for a home for copper sectoral investment, then the trickle down doesn't have to go far to get to Hot Chili. We are the standout ASX copper developer. We're the largest scale, some 3.4 million tonnes of contained copper, 3 million ounces of gold, and some other credits in silver and molybdenum. We're also one of only 2 projects capable in the world of producing 100,000 tonnes of copper in 2028. We're the first in line outside of the major miners. And outside of that, our peer space in the Americas, we're the only one that sits at less than 1,000 metres altitude, backed by Glencore, and this year initiating another growth phase to take this resource well over 1 billion tonnes. The capital structure has been cleansed over the years. We sit really clean with 119 million shares on issue, and we were quite careful with our money last year given the market conditions. And so we sit with strong cash of over 10 million at the moment. We have a beachhead in North America, and we are intending to replicate something that Equinox did in the last cycle, which was to move into the North American environment where all of these senior copper developments are generally funded, and in particular are valued at near on 6 to 10 times the valuation of the Australian large copper developers. And that is alive and well today, and we'll look at that in this presentation. Last year, we completed about 80% of a pre-feasibility on this large production hub that we're building on the coastline, looking at a scale concentrator for sulfide of around 20 million tonne per annum, feeding about 100,000 tonnes per annum of copper production and up to 70,000 ounces of gold. So to put that into context, not too dissimilar to what Oz Minerals is currently producing. We'll also be producing some cathode plate, and that's what we were studying. We paused that owing to some advances on consolidation that we'll be looking at. On the permitting, this is the reason why we're one of the first in line of the largest undeveloped projects in the world, rated by S&P as a top 10 undeveloped project in the copper space. We've spent over a decade and a huge amount of dedication over a team that's really stuck with this and now has nearly all of the key permitting in place to build this. Some of these items took 10 years to be granted in terms of the maritime concession for water access, and then even last year, another 2 years for the Navy to give us the actual physical land on the coast. So electrical easements in place, water power lines, water easement corridors in place, surface rights. We have a initial offtake partner with Glencore on 60% of our product at benchmark pricing, which means that a lot of the off-takers in the world are also hunting for the other 40% of supply. 40%, that's 40,000 tons of copper a year. And we put that into context of the projects that are producing in the ASX, which we'll look at. There's not many because we don't consider things less than 35,000 tons per annum of copper production as really meaningful in the global copper sector. Port access is the last thing that we're negotiating. We just happen to sit right next to a port. So in November, we announced an important transaction with Antofagasta Minerals. It allowed us to join a bridge between the Productora project next to the Pan American Highway in yellow and the Cortadera addition, which has quadrupled this resource base in the last 3 years since we added that. Circa 1 billion tons. And at the moment, finally, Hot Chili, after 2.5 years of negotiation with Antofagasta, securing a very low-cost transaction, which gave us the other side of the tenement to where our Cortadera porphyry discovery is. So that transaction was announced in November. We kicked off with 2 rigs on the ground, 3 shifts of drilling, and we're about to get our first results out to the market shortly. Importantly, what this has given us is access to a much larger potential porphyry cluster at Cortadera. No one knew that we didn't own the other side of the tenement boundary. We didn't show it on our maps, and we've been busy playing dead on exploration a little bit around this, this fantastic discovery until we had this locked up. So it's an option to take out 100% of AMSA's leases, which already has a discovered porphyry that was drilled back in 2005, our 4th porphyry, which we're now drilling and hoping to add quickly. You can see the difference of distance, only about 14 kilometres between Productora up at the top left corner of the slide to where Cortadera's 3 porphyries sit, extending through the surface. So quite a fantastic opportunity to double the strike length of Cortadera. And what this is all now standing behind is a pause on our development studies, the ability for us to look at this project in its entirety and to dream a little bigger. Firstly, on resource growth at the drill bit, and this will be growth focused this year. Development expenditure put on hold until we can push this onto the tier 1 plateau to the left of us. We sit well entrenched in the top 20 undeveloped projects. We're one of the few that's low risk, and ultimately we're driving for resource growth, which will hopefully give us the potential to lift the scale towards 150,000 tonnes of copper production. And for context, that would make Hot Chili, outside of the majors, the largest undeveloped by potential production in the world. And that's very important when you're talking about positioning on things such as total cash cost. We're not building this project with the hope that copper prices are going to go to the moon. We certainly see the thematic for them going a lot higher, but we're building this for an environment that is long-term, and that means total cash costs sitting in the first quartile are important. And how you get that in this business, in copper, you do it with scale. So that's what that growth will be standing behind. And when we look at the supply problem in copper, and this is something I asked my team to put together, and our Chief Operating Officer has done a great job on showing something I couldn't find from any other corporate presentation, from any other investment banker, was show me the projects that no one is disputing are coming. Not the Pebbles of the world that just got canned, or Resolution that's put back another 8 years. And I want to break this up into 3 slides. Firstly, what are the majors going to produce in the next 10 years? And there's near-term production. It's about sub 1 million tonnes undisputed. And then we look at the ASX and we realise we don't have a lot of large supply coming from the ASX in the next 10 years. And this is in green for companies where they've stated their production and development timelines, and in blue where we've applied Hot Chili's development timeline, just to be fair to the crowd. So you can see on the ASX, Hot Chili is not just the standout with its resource base and therefore leverage to copper prices, but also it's the most meaningful of the ASX large-scale copper developers in terms of scale. And then when we move to the TSX, we see where most of the senior projects are located. So currently Costa Fuego and Jose Maria, now owned by Lundin after its takeover, were the only plus 100,000 tonne projects outside of the majors coming in 28. So we've been able to take that timeline into consideration, take advantage of this year, not make it a foot race against ourselves, and bring this project still first in line out of one of the more significant projects in the world. I guess the opportunity for the Australian market, much as it was in iron ore and lithium, is that if you believe in copper, then believe in Hot Chili and the leverage that you get with this asset. Currently, the Australian large-scale copper developers are trading at about 1/10 where the North American copper developers are valued on metal basis. That will change, and I imagine that makes companies such as Hot Chili holding assets like this that are very de-risked and near-term extremely leveraged to the copper price. So over the coming year and a half, we aim to deliver this growth phase into a resource upgrade at the end of the year, deliver our PEA to give some granularity on what a 100,000 tonne per annum copper project looks like. And that'll be based on a pre-feas that's 80% complete, and then finalising the right sizing of this project in the first half of next year and on track to production in 28. So thank you very much for giving me the opportunity to provide this update.
Accent from?
Yeah, well, I was born in the US, so some words you never get rid of, mixed with a bit of Spanish now.
You do? You speak a couple of languages too, don't you?
Yeah, mainly Spanish. Yeah.
It's a bit of an overreach. I'll let you sit down. Great presentation. So 1:30 out at the booth, and we can do the 3D tour. That would be really interesting to see that little bit of tech in play as well. Right, making his way up here, surveying the audience as he comes. Who are you looking for? Anyone you need in particular? Is it your mum, your dad? Who's out there?
No, good to see a lot of friends and investors that I know of. Though.
Well, it's pretty packed. So we've got 1,800 people here, 1,800 people registered.
Standing room.
And they were actually trying to push people away at the desk yesterday. So you did really, really well. I know a couple of us said it was a bit sort of squishy, but imagine if we'd let all the other people in as well. It'd be over the top. Right, are you ready?
Yeah.
All right, let me introduce you to this fine fellow, everyone. We're talking Caspin Resources. They floated back on the ASX November 2020.
Correct.
All right. They're an active explorer for base and precious metals. They have very exciting discoveries at Yarrawinda Brook and also Mount Squire. They are both based here in Western Australia, and discussing the latest results and what to look forward to this year, 2023. This fine fellow here is their CEO, Mr. Greg Miles. Please make him welcome.
Thank you, Christina. And welcome everybody to an update on the Caspin story. Great to be back here at this event, well run by Jackson, Stu and team. Obviously the presentation's been lodged in the ASX, and you look at the disclaimer. As is customary, we tend to start off with a corporate overview, but I noticed that this slide probably hasn't changed too much over the years since we've been presenting at this conference, since that 2020 listing. The substantial shareholders there haven't changed, capital structure largely unchanged, and board and management largely unchanged as well. Very stable sort of company. The share price obviously changes. Shares go up, shares go down, depending on the sentiment of the day. But what doesn't change is the machine that continues to grind away in the background. And I thought I would just acknowledge that machine. Fine bunch of looking fellows who obviously aren't going to be winning any beauty contests. And some people might question the diversity in our company as well, but they'd be wrong, because everybody in that picture brings a unique sort of talent or skill to the table. And if you don't know those people, investors should be confident that they are some of the best in the business. And I should also acknowledge that behind the machine is some lubrication provided by people like Fiona and Evie and Sil, and there's probably numerous others. So Caspin itself, it's two projects since listing, the same two projects that we listed with. And I guess by definition, the fact we've still got the same projects and still working on them 2 years after listing probably demonstrates that it's been a very successful float. But Mount Squires has probably been the project that's risen a little bit further up our priorities in the last 6 months, and I'll talk about that today. But obviously Yarrawinda Brook continues to be our flagship project for obvious reasons, which we will also touch on. Now, one of the laments of people coming to these sort of conferences is a lack of news stories, which is sometimes unfair, but this is going to be my attempt at presenting a news story, because it is a relatively new story. I think the conference 12 months ago, I didn't actually talk about Mount Squires at all. It was all about Yarrawinda. Now I think can't afford to do that. We have to talk about Mount Squires and the opportunity that it presents. And that is a very strategic position in an emerging province. The spotlight has been turned onto the West Musgrave in recent times. Obviously, Oz Minerals developing or giving the go-ahead to build a $1.5 billion nickel copper mine just over our tenement boundary is a major event that's only 17 kilometres, I think, from our tenement boundary. And subsequent takeover by BHP is even going to bring more attention to this part of the world. It's going to be one of the largest nickel developments that Australia has seen for 20 odd years. We've also, but I guess what we've recognised in this project is not obviously an extension of that same belt that hosts that mineralisation, but we also have an interesting sort of gold trend in this project, and so essentially you get a two for one deal. So after a couple of years of pandemic related disruptions, it's been great to, in 2022, get on the ground and do some meaningful work. And it was really a kind of a back to basics kind of approach. Go out and do old-fashioned soil sampling, reconnaissance drilling and geophysics. But I must say that the soil sampling is not just sort of conventional. We've had great success with ultra-fine fraction methodology. It's a relatively new technique designed to sift through the dilutive sands of the desert regions in Western Australia, and ideally suited for this part of the world. And we've had a huge amount of success with it. But you can't also, just getting boots on ground, as you can see Gary there, is also fundamental to the success that we've had. And so what that geochem program has done, we started out with a fairly modest program, and then because of the results we're getting, we actually expanded it as we went. And we were finding all these brand new nickel, copper PGE, and gold anomalies within the project. Now, there've been sort of legacy work across this project area before, but it was a real mishmash of techniques, and some of those techniques were certainly not effective. So now we've got a single methodology over most of the project, albeit there's still a lot of gaps to fill, but it's starting to deliver results. And I guess, yeah, so what? It's a nickel anomaly, or yeah, so what? It's a copper anomaly. Importantly, these are the same mineralisation signatures that we see just across the tenement boundary, Nebo, Babel, Suketh, which I'm hoping that if you stick around, Jim McKinnon-Matthews from Oz Minerals will talk about today. All these fantastic peripheral deposits within that project area, and we're seeing the same sort of mineralisation signatures. So that gives us a lot of confidence that these are real anomalies. Sorry, and just, you know, more, here's another selection. Redwood, you know, the purpose of drilling at Redwood was to demonstrate that the continuity of the same mafic host rocks continued over our tenement boundary that host really interesting grades of mineralisation over the tenement boundary on Oz's ground, One Tree Hill prospect, good lengths of higher grade copper mineralisation. We've obviously just heard about how important that project is in terms of Australia's copper supply. But that's, you know, that's sort of our first pass targets. And there's a number of other anomalies. We bring together a number of different data sets. We've done magnetics, EM, this soil geochem, and there's obviously some drilling now that we've done as well. We bring all that together to identify our targets. And there's some of these sort of targets that actually don't even have a mineralization signature as yet, because we haven't even extended the cell coverage over those. So there's a lot of other targets still to test in 2023. Then on top of that, as I said before, it's a 2-for-1 deal. Very interesting gold trend. So we announced the final sort of results from their gold exploration on what we call the hand pump trend. Hand pump was a historical prospect identified some time ago, but it was probably the easiest of prospects to find. Gold literally pops out of the ground. It'd be any kind of technique will find it. But we're also recognised that structural feature that hosts the mineralisation there is actually popping up in a number of sites. So Duchess is an area that we drilled last year. Interesting grades of mineralisation. What we found is that the weathering profile's quite shallow. We probably ended up having a rig that wasn't ideally suited. Well, once we'd honed in on an area, what we really need to do is bring a deeper, a larger capacity RC rig out to prospects like this. I will say though that Gyro Australia's little air core rig did a fantastic job out in this part of the world. But there's a number of other interesting sort of gold anomalies. Regal prospect we announced this week. Very long, large gold anomaly, all undercover. No chance of anyone finding this before, just through outcropping mineralisation. Sitting at a confluence of regionally important structures. Can't wait to get back out there, infill the current spacing, and hopefully get a drill rig in there during this current field season. So that's Mount Squires. That's our sort of our news story. As I said before, Yarrawonda will remain our flagship project. We're currently working out here at the moment. Everybody's familiar with the Chalice story, and I encourage you to stick around for Chalice's presentation later on in this session. Where hopefully Alex will talk about some of the exploration work they're doing on that northern trend beyond the Gonaville resource. So they've demonstrated that the host rocks from that Gonaville resource continue further to the northeast. Dampier prospect is one of their more interesting recent hits, and it demonstrates that the same host rocks that host that large world-class deposit continue north and ultimately end up in our project. So a very strategic position for Caspin to hold. Now, last year we did a very extensive program, got some of our best hits in the project to date. Yark 36 was really a standout, 17 metres at a bit over a couple of grams, 4E. That's platinum, palladium, gold, and rhodium. Rhodium's a very interesting sort of metal, one of the most precious of precious metals. Differentiates us somewhat from some of the other PGE explorers. And I guess what our program is designed is to try and find continuity of that mineralisation. Twofold, both near surface but also at depth. And we released this week the first results from that program, and it's demonstrated that there is more mineralisation near surface now, but it's really only the start of what's been a really large program. There's another 30-odd holes still to come in the pipeline that we're waiting for assays. But there's still a deeper target. It's more of a conceptual target at the moment. What we're trying to find is where is the basal contact of this intrusion? We've found that sort of near surface mineralisation, but where's the base of it, which is where you would sometimes expect large sulfide accumulations to settle. And we know that the intrusion plunges off to the northeast of our current drill area, underneath some granite cover. And but you know where exactly that is, we don't know. We're starting to see larger zones or broader zones of mineralisation in that northeasterly direction, you can see some of the large, wide zones of mineralisation intersected to date. You don't actually require too much of a grade increase for some of that mineralisation to be quite economic. We've got a ground EM crew on ground at the minute trying to assist us with identifying those potential massive sulphide accumulations, as well as drilling some of those, stepping out with the drill bit to try and find that contact as well. But I guess what we've recognised is that Serradella is a fantastic prospect. The Yarrabrook Hill intrusion is a fantastic prospect, but there are actually many more targets for us to go. And whilst that's been the focus of our program to date, we have a number of other geochem anomalies in the pipeline that are yet to be brought up to drill ready status. So that work is carrying on in the background as well. So a busy 2023 ahead for Caspin. As I've said, we're drilling out at Yarrawinda at the moment. This is the prime field season for us. During the summer months is the best drilling conditions. And then we'll dovetail nicely into our Mount Squires project from about April, May onwards. Multiple phases of exploration programs, further soil geochem, geophysics, reconnaissance and deeper drill testing. I've allowed a little bit of fat in there, but as we found out this year, quite often when you have a bit of success, your programs tend to run over time, which I note, Christina, I'm not going to run over time today. So I'll leave it with you, ladies and gentlemen. Thanks for your attention. Go Caspin.
Go Caspian, Mount Squire, Yarrawinda, Greg, the machine, the team, Caspian. Let's see where we are next year. That'll be very interesting. Right, our next presentation. Come on in, there are some chairs up the front. If you want to come and grab yourself a table, feel free. So our next presentation at RIU focuses on Bellevue Gold, presented by their CEO, Mr. Darren Stralow, a mining engineer who grew up here by his own admissions on the mean streets of East Freo. He bleeds purple and white. He bleeds blue and white. If you're not from Western Australia, I'll explain that to you later on. Darren and I had a really good talk yesterday afternoon, didn't we? We chatted about Bellevue and what was happening. And I mentioned that I have this really long list of points about him that I have, I've been given to give to you all. Qualified mining exec, senior team member at Northern Star. You've got a really impressive career history. But what I wanted to know, what I asked Darren was, what is the headline of your talk today? Why should we stay here? Why should our bums stay in the seats for your talk, Darren? And he immediately just went boom. And I quote, "We are building Western Australia's next major gold mine. We are building Western Australia's next major gold mine." And I said, Darren, that would be if things go to plan. And he said, no, we are doing this. So Darren, in 15 minutes or less, tell us how. Please make him welcome.
Yeah, thank you very much for the kind introduction. I'm always glad to get up on the stage at RIU without being tackled by one of the geologists within Bellevue, and they let a mining engineer come up here and talk. So I'll try my best to keep up with the geology, but we have people in the booth if you've got some questions later on. So as Christina said, we are building Australia's next major gold mine. We have a mine in the Northern Goldfields, which has grade, it has scale, it has duration. It's going to create significant margins, and it's going to be in production later this year. So, these sort of assets don't grow on trees. We're very happy with the asset that we have, the progress that we're making, and I'll give you a good update on it today. What we've defined is a project that has a 10-year mine life. The first 5 years of that mine life produces 200,000 ounces per annum at $1,000 to $1,100 all-in sustaining costs, so firmly at the bottom end of the cost curve. And it'll be pumping out circa $250 million of free cash flow per year during that time. It is a project that has grown significantly and is still growing. Bellevue won the Craig Oliver Award here at RIU a couple of years ago. So it's really pleasing to come back here and talk about the progress that we're making and the fact that we'll be in production very soon. We're underground, we're mining, we're in construction, we've got our team in place, we've got tier 1 contractors in place, and we will be producing gold later this year. So a lot of the story about what we're doing is on that de-risking front and on the building front as we get closer to building the mine, getting first gold bars and into cash flow. The process plant construction is going really well at the moment. All our critical path items are either manufactured on boats sitting on the dock in Fremantle or already on site. Mine development, we've got a really good underground contractor. They're actually going ahead of schedule. So what that'll mean is we'll have more areas open, more stoping levels, more development levels open for first gold, which puts us in a really strong position. Good ore bodies, when you get underground and you drill them, they just get better. And we're seeing that at Bellevue as well. So our grade control programs are giving us positive results. We've got all our critical path permits and, as I said, firmly on track for gold production later this year. I do want to talk about sustainability for a second. Amongst this crowd, when you're in that explorer developer stage, what you tend to do sometimes is take the path of least resistance through to first production. Bellevue's trying to do things a little bit differently and really focus on that ESG space as a competitive advantage throughout that exploration and development phase. We just put out our second sustainability report a couple of weeks ago. Has some really good information in it. We are going with a higher renewable energy power source, so we're going to be a very low carbon emissions mine. And from a diversity perspective, Bellevue hasn't dropped below 40% female participation at any stage in the past over 2 years. So it's a really good platform to grow on and one that we'll look to expand off when we get into production. But here's the exciting stuff, a bit on the location of Bellevue. So where we are located, we're in the Agnew-Luna Greenstone Belt. We're surrounded by 5 million ounce plus gold mines. We're surrounded by significant nickel mines, and within a sort of 15-kilometre radius of us, we've got 3 significant development projects. So Liontown, ourselves, and IGO's Cosmos. What this shows you is that we're in a really good address, a really good corridor. It has all of the crustal scale mantle capping structures that you need to create these big significant systems. And that's what we're confident that we've got at Bellevue. So zooming in just on the mine, it was a historic mine back from about 1987 through to 1997. They mined one structure sort of through the middle of it here. Once that mine was shut in 1997, Cosmos was discovered, and you can see that in the top corner here. And Bellevue was just used for water depository from Cosmos, and no gold exploration happened here for 20 years. Why was that? Back in that sort of 1990s era, it was just one shear structure. So just the Bellevue lode, you can see that on the left there. And it hit a fault zone called the highway shear. And that was interpreted to displace the ore body. They couldn't find it on the other side. There was a low gold price. It was a hard operating environment. The mine ended up closing and being fully rehabbed. When you smash cut to the current day and the work that our great geology team has done using lots of excellent techniques, it has actually been discovered to be a much more significant endowment there. So, we've got hanging wall structures like the Tribune Shear. We've got flat structures like Viago, which is very high grade. We've got north and south extents of the original Bellevue Shear. And we've got a footwall structure called Deacon, which is 1.3 million ounces and doesn't daylight at surface. And then there's also potential for further flat dipping loads and further footwall loads, which we can define when we get underground and get better drilling platforms. So this is what the ore body looks like in 3D. As you can see, it's quite laterally extent. It goes over sort of 2.8 kilometres up to 3.5 kilometres if you include the southern stuff. And if I look at it in 3D and spin it around, what you can see is you've got your Tribune, hanging wall shear, the north and south extents of Bellevue, and the Deacon footwall shear down there, which is that virgin 1.3 million ounce deposit that we're going to get access to later this financial year. It is very well drilled out. We've done over 500,000 metres of oriented diamond core drilling. When you have a look through the mine corridor, it's quite well drilled out in that mine corridor, which gives us a lot of confidence when we go into that mine plan. However, outside of that mine corridor, there are still heaps of targets to chase. I talked about the growth originally. We've continued to grow the resource. So, the resource is just a point in time measurement of an ore body. We defined an over 3 million ounce resource, 9.9 grams per tonne. That's enough to pull the trigger and start building a mine. The reserves continue to grow. We put out a new reserve in June last year of 1.3 million ounces. And that's where we get our 10-year mine life from. It's time to build it now, and we'll keep growing those reserves and resources with more underground drilling as we get access from the infrastructure corridor underground. The 10-year mine life that I talked about, this is what it looks like. First 5 years, all designed, all scheduled, all ready to go. When we get the platforms and extend it from underground, we'll drill out. But I think what's important, and you'll see when I take you through the layout of the mine, it really is a platform for growth. So, that potential to get the mine set up, get into production, hit our run rate, and then grow production off that really does exist. Going back into 3D, you can see the mining that we've done here. So we've been mining underground at Bellevue for over 2.5 years now. We've done over 8 kilometres of underground development. It's set up a really good central infrastructure corridor that we can drill off. And when you have a look at how we're setting the mine up, what you can see is, it's being set up for productivity and growth. We have a northern mining front, we've got a southern mining front, we've got a whole other portal called Tribune. So 3 mine access areas just to fill a 1 million tonne per annum mill. And what you can also see here, if you have a look at some of the drill hits here, as I go through, this is the mining that's going to be done in this financial year. This is the mining that's going to be done in next financial year. You can see some of the significant drill hits through here. And this is the mining that's going to be done in FY25. So this is sort of within 2 years of production of the mine. What you can see is that we're not just crossing our fingers and hoping that the gold's going to be there when we get down to mine it. We actually have, high quality, oriented diamond data that backs up what we're going to do, which gives us a lot of confidence. You can sort of see here, as I said, the northern zone, the southern zone, and the Tribune over here. But if you really look at it in an oblique view, and this is something that we really like from a productivity perspective, you've actually got sort of 1, 2, 3, 4, 5, 6, and then Viago comes on that 7. So 7 different mining areas that we're going to be able to take mine at the same time, all independent of each other, and to fill up a 1 million tonne per annum plant with those sort of mining fronts is going to be relatively simple. This shows you the whole mine plan, very well designed, you can see, but obviously not closed off, and will still grow when we get underground. The advantage that we've had getting underground for 2 years, we've really experienced what it's like down there. We've got fantastic ground conditions. It's a massive basalt rock mass, so very hard, but very competent, does what you want it to when you fire it, both in the horizontal and the vertical plane. We've got significant infrastructure already installed, so ventilation systems, independent tag boards for each mining zone, really helps you from a productivity perspective. We have a contractor on site called Develop. These guys are really good at what they do. We're ramping up. We've held them just to capital area, so just getting the decline down, getting vent systems set up, and they've still managed to, in the hard ground that we have, average over 300 metres per month per jumbo, which is a fantastic effort. Last month, so this quarter, we have just opened up the ore drives. We added an extra jumbo to the fleet, and we are doing a couple of raise bores to give ventilation and escapeway systems to allow us to start stoping later this quarter and early in the next quarter. So as I said, ore development commenced. This is a picture of the Upper Armand area. It's the first of 5 production areas that will be online prior to us turning the mill on. We will have surface stockpiles of over 200,000 tonnes at circa 5 grams per tonne for commissioning of the mill, which really de-risks that mill commissioning. I said before about ore bodies getting better. Good ore bodies getting better when you get underground and drill. We've defined this Upper Armand area from surface. You can see the wide space drilling there. When we have the underground platform on the right there, you can see we've drilled it out to a 20 by 10 grade control pattern. And what that's done is it's actually extended the high grade and shown that there's more high grade there when you get that more density of drilling. And just in that small area of the mine, we had a plus 17% ounce reconciliation, which is the right way to go. As I said, this is that 1251-100 Armand drive. It was exactly where we expected it to be. It's well drilled. You can really see the ore body well. And one thing that we're really excited about in this plane is that, the geos will interpret that, there's one big structure going through there because that's what the drilling said. But what we're actually seeing is these, splay structures that you can see in multiple faces that are grading that aren't included in that model. So we think there's potential for some great upside when we do that. From an exploration perspective, I talked a little bit about it, but the ore body is certainly not closed off. We've got ore grade targets. We've got downhole EM plates to the north, to the south, and at depth, all for following up. And when I talked about that footwall structure before, where it's taking 1.2 kilometre holes from the surface to drill it out before we had the underground. Now we are doing it from underground, and it's sort of 500-600 metres away. We're going to get closer over the next 12 months. The big story for us now is building a processing plant. So, we said we're going to be in production. What do we need to get into production? We actually need somewhere to process it. We have GR engineering on site and making fantastic progress. We've been really fortunate with weather over the summer months. We haven't had any significant rain. We've poured 2,100 cubes of 2250 cubes of concrete there. So the civils are really well advanced. And when you look at this plant on a weekly basis, it just keeps going up. It's very simple processing, 1 million tonne per annum CIL plant, nothing outrageous or crazy here. And we're firmly on track for having this complete before the end of the year. So that's the Bellevue story. It's a world-class mine. It's got tier 1 ESG credentials. It's still going to grow. And we're building it. Thank you.
Well done. Congratulations. When you said gold doesn't grow on trees, or it doesn't grow on trees, it reminded me of an article we did a while ago with the ABC in Kalgoorlie saying that gold was they're actually finding gold in the leaves of some of the trees. Did you say that?
I haven't, but I don't think the enviros would like us cutting down
Good,
trees to get gold.
Good point. Yours could be far better. All right, team. We're going to from one Darren to another Darren now. We are talking about, well, if you go back late 1700s, early 1900s, if you went to a little place called Pickle Lake, which is in Ontario in northern Canada, the main trade there was the fur trade. That was what kept everything going. And then in the early 1900s, they discovered gold, and it was all game on. And there was a few years ago, I remember a headline, and it declared, AuTECO Minerals has plenty to crow about at Pickle Lake's newest gold prospect. So today, AuTECO Minerals is focusing on advancing the high-grade Pickle Crow project, as they named it. It's located in one of Canada's most prolific gold mining districts. And this man here is another Darren. He is also a former Northern Star alumni. Would you please welcome their CEO, Darren Cooke?
Thank you, Chrissy. And I'm pretty sure you'll see by the end of this presentation, we do have quite a bit to crow about. It's a great project, and hopefully people can really understand that and the potential upside that we have on the project itself. Okay. So look, this is the Explorers Conference. And, what I want to give you a flavour of today is the regional upside potential that we have at this Pickle Lake project. What we've managed to secure is an entire mineral district, not just the Pickle Crow deposit. And one of the reasons we went to Canada is because these opportunities were still available, and we have sensational prospectivity, and I'll take you through some of that in coming slides. So look, just a brief overview of the company itself. We're located in Ontario, Canada. And for those of you that don't know much about Ontario, it is a true tier 1 jurisdiction in every sense of the word. And, I know there's been a lot of, comments around permitting in Canada. I can absolutely assure you that where we are working and the people that we are working with, it is absolutely no more difficult than getting things achieved in Western Australia at this point in time. So we're very confident with the permitting. We're very confident with progressing this project, and the permitting is not an issue for us. We have year-round access. We're blessed, even though we're in Northern Ontario, We have a sealed highway that we can get to 365 days a year. We have a large airstrip there, and we're only 7 kilometres from a town of 400 permanent residents. So it is really the gateway to the Northern First Nations communities. It's a supply outpost. And, if you want to build a mine, it's a great place to do it. We have hydropower running through our project. So, the infrastructure, the support, the location is excellent. And from a geologist's point of view, we're in one of the best addresses globally to look for high-grade gold. We're in a belt of rocks that hosts over 40 million ounces of gold, so it is globally significant. The asset itself, as Chrissy alluded to in the introduction, it has a long history of producing very high-grade gold. So between 1935 and 1966, they actually mined 1.5 million ounces in an incredible head grade of 16.1 grams per tonne. So, that's a head grade that's produced. Very simple metallurgy, all gravity recovery, but, it's amazing to produce from veins at that sort of grade. What we also have there is a small processing plant, and it's too small for our ambitions there. There's no doubt about it. But what we're looking at is that gives us options in terms of if we wanted a small scale startup. So, it's a great head start to have. And then just in terms of growth, as you'll see when we talk about the team, we've got a team with a proven track record of delivering results. We have, as a base point, a starting point, one of the highest grade 2 million ounces globally. So our current resource is sitting at 2.2 million ounces at 7.8 grams per tonne, and it will grow. And as I alluded to before, we have amazing camp scale targets on the 500 square kilometres of ground that we actually manage. I alluded to the team before, and this is a team that has a proven track record. You can see there, following on from Darren's presentation, there's quite a few familiar faces there. This was meant to be Bellevue Mark II in North America. And you can see we've got Ray, who was the previous chairman of Bellevue. We've got the current chairman on the board, Kevin Tomlinson, current managing director in Steve Parsons on our board, and obviously Mike Naylor as well, and myself with the Northern Star background and our chief geologist, Juan. So look, I won't harp on this for too long, but we do have a team that has a track record of delivering value and delivering these projects. We're probably a couple of years behind Bellevue in terms of where they are. But if you go back and look at the ounces where we are in terms of our resource compared to where Bellevue was at a similar stage, we've actually got more ounces on the books at this point in time than what Bellevue had at a similar time in the life cycle. So there's no reason to think that in a few years' time, we won't be sitting up here like Stralow and talking about going into production eventually. It's on the way. Just in terms of the corporate overview, very good share register. We've just done a capital raise. We currently have $11.8 million in the bank, so we're very well funded. And it was great to see that the capital raise was very well supported by our existing shareholders. So, we spend a lot of time talking to them. They clearly understand our strategy, and they're clearly supportive of the direction we're heading. The other key takeaway from this slide is that we have a very strong institutional backing. 45% of our registers are institutional holders, which is a very good sign for an early stage exploration project. And look, our share price has been pretty much tracking gold sentiment and gold price, as you can see from the graph there. And look, we're very confident that as the gold market turns, and we believe it will, you can just see some of those macroeconomic influences from North America and how they impact the gold price and sentiment. We're expecting gold to be a very good bet in the latter half of 2023, just as things improve in America as interest rates flatten off. And we think it's a great buying opportunity at these sort of levels. Two things to really focus on in terms of how we're going to grow this company, and its growth via the drill bit. The first one is the regional discovery. We always think about what's going to create value for our shareholders. And one of the things that no one disagrees with is that if we can make another regional discovery outside of that 2.2 million ounce resource that we have as a base, that will be a game changer for AuTECO. So we're laser focused on that regional exploration, particularly at this time of year where winter is the optimal time to drill. When the ground's frozen solid, it's easier to get the drill rigs around. And I keep saying this, it's really difficult to explain to Australians that we'd rather drill in -30 than +30, but it is easier to move the drill rigs around. What we've managed to get there is one of the most underexplored greenstone belts in the world in Archean rocks. There's been very limited systematic modern camp scale exploration, and it is the first time that our ground's been consolidated to enable us to do this region-wide study. We have 500 square kilometres of ground to play with, and what limited work has been done on the ground, and less than 5% of the drilling has been done outside of the mine area, what little work has been done has very strong indicators of gold mineralisation and base metal mineralisation I'll also add as well, and I'll show you why. There's the right structural architecture, there's the right deep-seated structures. We have all the ingredients there to make other discoveries. The second part is the brownfields exploration or the near mine. We haven't forgotten about that. We have the base of the 2.2 million ounces at 7.8 grams per tonne, and our resource remains open in all directions. We've done a lot of work geologically since we've had this project. We've come up with a whole heap of new interpretations. We found multiple mineralisation styles. And one of the really encouraging things is the bulk style of mineralisation has been overlooked historically because the old timers were operating at a very high head grade. So, we still see a strong growth potential in the near mine resource, in addition to this world-class exploration potential. Where we sit, we're in the Valley of the Giants, if you like. We're in the best belt of rocks. It's a belt of rocks that's Archean in age. It's very similar to the rocks here in the Yilgarn. I look at the rocks there and can't tell the difference between what I used to look at in Kalgoorlie. So very familiar to what we're used to dealing with. But this belt of rocks that we're in the Superior Craton, it's called the Uchi subprovince. The key takeaway from that is it's the same belt of rocks that hosts some brilliant deposits. Hosts Red Lake that Evolution are in, the Dixie discovery that Kinross just purchased for $1.4 billion US. We're near an old Barrick mine called Golden Patricia. And the amazing thing about that is it didn't produce a lot of gold. 500,000 ounces came at a head grade of 15 grams per tonne from a narrow vein, and very similar style to what we see at Pickle Crow. So, the whole district is ripe for high grade gold. And what's really pleasing to see recently is we're getting the majors moving back into the district because they are recognising this discovery scale potential. This is the ground that we hold, our 500 square kilometres of tenure. And you can see we put a lot of effort into it. We pegged the whole northern part of the Pickle Lake Greenstone Belt now. And what's really amazing is inside that little gold box is nearly 4 million ounces of gold endowment. So our current resource and the 1.5 million ounces produced historically. Less than 5% of the drilling has been done outside of that box. And like all the other Archean systems that we see in Western Australia, in these shear hosted orogenic systems, there's parallel structures, but there's been very limited work done on the structures that are parallel to the main mine trend. So this is one of the most underexplored greenstone belts globally, and you would not find a greenstone belt in Australia this underexplored. So that's where we see a lot of potential. Now, we're investing in cutting edge technology. As a geologist, I'm fully aware that all the easy deposits have been found. The best way to find new deposits is the science, and science is evolving rapidly, as we all know. And to give you an example of what we're doing to find these deposits, this is what we had to work with in the northern part of this greenstone belt previously. This was magnetic data collected by the Ontario Geological Survey in 2004. What we did last year was we acquired some helimagnetics using the latest tools available. That's what we're seeing now. You compare them, that to that, previously we were blindfolded, and now we can see intricate details beneath the surface of where the gold mineralization is. We are now able to interpret what's controlling this gold mineralization. And our great group of geologists, and I'll acknowledge the team on the ground in Canada. Most of our team is based in Canada. Great bunch of geologists, and they're doing some quality work. But we're rewriting the map. All right, this map now looks very different than what we were working with previously. These are the major crustal scale structures that we have, and you can see where the main deposit is. But when we do the detailed interpretation, all of a sudden we're seeing secondary structures come through, some trending towards the northeast and some trending towards the southeast. But what's really interesting about this is when you overlay the mineralization onto it, surprise, surprise, as most structural geologists will tell you, we're seeing a lot of these deposits at the intersection points between the major crustal structures and these secondary structures. So it's not really a earth-shattering piece of information, but now that we can actually see it with the data that we have, we can now target it in areas that have never been drilled. So you can, trawling through the historic data in that less than 5% drilling that we have, you can see that these structures are fertile. You can see some of the hits we've got, 6 kilometres from our resource, we've got 1.8 at 66.9. We've got 13 kilometres from our resource, we've got 4.6 at 7.2, and so on and so forth. And have a look at this, and I can go through it at the booth in a lot more detail. One of the other things that's really interesting is we're seeing evidence of base metal mineralisation as well, VMS style mineralisation, as well as magmatic sulfides. So we're exploring for those things as well, and the potential for discovery is very, very high. So look, what we're working on now, we've got 2 drill rigs up there. We're planning on 15,000 metres during this winter campaign. We've got years worth of targets to drill, and we're really focused on some of the higher quality targets at the moment, particularly on this Tarp Lake Shear. We're following up results we got last year, such as 2 metres at 91 grams per tonne out at the Cohen MacArthur. And, you will start to see some news flow come from that in coming weeks. It's going to be really exciting times. It is exploration, but, very confident that we'll make discoveries. And look, in the mine area, it's not finished. We'll revert back to this area in summertime. But what we have here is a major vein system, 1.5 million ounces produced historically, 2.2 million ounces in the current resource, and will grow. And recently we're finding more and more mineralisation in different orientations based on our structural interp. We've got the Tyson veins here, recently 2.7 at 16, 2.3 at 16, and a big future there on that front. So look, what we're focusing on, we're fast-tracking the regional exploration. We're absolutely laser-focused on that. We're looking at the resource expansion, but we also are working on the significant opportunities that we have to unlock as a company. We're testing those base metal targets. We have 40 kilometres of underground development that's a competitive advantage that can help us get back underground for limited capital expenditure. And we have surface infrastructure that will help with startup if that's the way we want to go. So in summary, great location, tier 1 jurisdiction, asset with some of the highest grades and long history of production, excellent upside potential. Please come by the booth and I can talk to it in more detail. But all of that's great on paper unless you've got the team to unlock it, and we believe we do. Thank you very much.
Good on you. Welcome. Thank you. Right, from one tier 1 to another, and we're travelling back to Australia, specifically over to New South Wales. And we're going to focus on the exploration success of Helix Resources in Cobar. And to talk us through Helix is this fine gentleman. He actually joined Helix back in January 2021. So your 2-year anniversary, you're doing very, very well. So as MD, this is Mike Rosenstreich. And since he joined Helix, he implemented a new corporate strategy. He's helped them to raise $20 million. He's installed a new management team. He's divested non-core assets to focus solely on its Cobar regional projects, exploring for copper. Would you please make him welcome?
Thank you very much, Chrissy. As a Fremantle local, welcome. It's great to see an event like this in the port city. It's a great opportunity to present Helix Resources. We're an early stage discovery company following the restructure that Chrissy described. We're solely focused on the Cobar region, predominantly on copper. For an early stage exploration company, we're very well funded. We have $8.6 million cash, and we're deploying that cash on a 2,000 square kilometre large strategic land position, which contains 2 advanced projects with mineral resources. I'm also really proud of the exploration team that we've put together, which are actually locally based, virtually on the doorstep of the project, and fully committed and intellectually invested in bringing good science and good geology to this large land position that we have. We've raised over $20 million in the last 2 years, and that enables us to undertake both regional exploration and advanced project exploration. Traditionally, the company tended to be undercapitalized, and I think that brings a different modus operandi, perhaps a little bit of a hand-to-mouth existence. This is the neighbourhood in which we're focused. This is prodigiously endowed with copper, base metals, gold and silver as well. We have two large tenement areas here, overlying key mineralised structures. To our north, you'll notice Helix Resources Ltd operations. They've been mining, finding deposits there for the last 30 odd years with a run rate of around 25,000 tonnes of copper production a year. And to our west is the CSA mine, currently owned by Glencore, but being transitioned to a new owner for $1.1 billion US. This is a magnificent ore body, over 1.5 million tonnes of copper endowment, and probably one of the highest grade copper mines in the world, with a resource grade around 5%. To our south and east, we have emerging projects. We have existing operations with Aurelia and Peels on the development pathway. So this is a great neighbourhood, a very prospective neighbourhood to be focused. As you drive along the sealed roads between Cobar and Nyngan and east to Orange, there's power lines, railway lines, and you've got the choice of one of 6 processing plants, all of which are suitable for processing the type of mineralisation that we have on our projects. And that creates real optionality in terms of those commercialisation options. This is a view of our tenements, and what you can see here is the outlines of the key tenement positions, and we've identified 3 key structural mineralised trends. We have the Rochford trend, to the east we have the Colorina trend, and on the west we have the earlier stage Mariola trend. I've coloured that map up with the VTEM. Darren referred to cutting edge science. Only a few weeks after starting with Helix, we raised $3 million. We spent nearly $1 million on flying that VTEM survey. VTEM, electromagnetic surveys, the conductivity of the rocks is a key discovery tool in this region. How can we undertake good quality regional work if we don't have a data set to be able to rank and prioritise our targets? We do now. I'd like to focus in on this Rochford trend. This is probably where we've done the most of our work. In the central portion of the Rochford trend, we have our key project, the Canbelligo copper project. It's a joint venture with Eris. The exploration model that we're chasing is Cobar style mineralisation. Small surface footprint, great vertical extent, often parallel repeat lodes, and importantly, high grade. That's what we're targeting, and that's what I think we're onto here on our Canbelligo prospects, and let's see what you think. In this map view, the brown is copper and soil anomalism, and the red hatching represents mineralisation. On the right, we have the outline of the mineral resource at Canbelligo. And to the left, just in the last year or so, we've identified parallel lode structures west of that, within some hundreds of metres. So this is starting to look and smell a little bit like a Cobar-style system. If we have a look at a long section through the deposit, this is what it looks like. And this part of the slide, first 200 metres, is pretty much what was there when we arrived when the new team got established in early 21. A mineral resource going down about 200 vertical metres, 1.5 million tonnes, 1.2% copper. If it's a Cobar style system, let's drill beneath it. Let's see what we get. So we drilled the next 200 metre panel. And yes, as you can see by that green outline, which is the main Canbelligo host shear structure, we hit some good higher grade shoots. That 18 metres at 3.4% copper, we didn't even have to announce the assay. We just showed a photograph of the core and our share price went from 1 to 5 cents. That's the kind of leverage that exploration success in a junior offers investors. So we're starting to establish the depth continuity now 200 metres beneath the base of the mineral resource. What happens beneath that? And that was the challenge that I put to the exploration team. Let's be bold. Let's step down another couple of 100 metres. So we drilled 2 holes, 200 metres apart, north-south. Those holes are really important. Does that shear zone structure persist another 200 meters down? Yes, the results showed that it did. But importantly, those two drill holes provided a platform for downhole geophysics. More conductivity surveys. Are we able to pick up conductive targets? Copper ore bodies can be conductive. And we were very excited to report that we had delineated very large scale, high order conductive plates off the surveys of those two holes in areas that had never been drilled before. These are not the easiest drilling conditions here. And we had a couple of goes at drilling them. And then finally, last week, we were able to announce that we hit the central portion of those conductive plates. We released the results where we had intersected 14 meters with visible copper sulfide mineralization, including a meter or so of this semi-massive chalcopyrite, that's the copper mineral. And this is what we think these plates are representing is high-grade copper shoots, and we're starting to see that in the drill core. These assays are pending, but this drill core looks a lot like drill intercepts 200 meters vertically above. And obviously we're hopeful that this will all join up and we'll really now be able to define these high-grade shoots with strong depth extent. We want to be on a development pathway. It's all very well drilling good results, but what does it all mean in terms of the resource potential? In October of last year, we recognised the opportunity to perhaps identify some high-grade shoots within the upper portion of the Cambalago system. And we hit 16 metres at 3.2% copper. That's the highest grade intercept above about 150 vertical metres. Earlier this year, we drilled 7 RC holes to follow that up, and 5 of those RC holes intersected significant visual copper sulfide mineralization. Assays are pending. So that creates really exciting potential to increase our copper inventory at shallow levels within the overall outline of the existing resource by increasing the grade. Let's see how that turns out, but I think that's one strong potential. Secondly, we have the obvious potential to drive the mineralization deeper using our downhole electromagnetic surveys and models to be able to model the high-grade shoots and hit that. And right now we have a drill rig working away, drilling a parent hole that we can daughter off and test that. And thirdly, we have the potential to, whether those Western lodes are Cambalago style lookalikes. So I think there's a lot of excitement there in terms of our ability to develop that resource. In terms of planned activities, a lot of the news flow is going to focus around what we're doing at Cambalago, a lot of pending assays and a mineral resource update that we have due, I'd say, before the end of the June quarter. And I think that's going to put us on that platform in terms of development pathways. I also want to emphasize that we have a very active regional exploration program. It was a core part of the fundraising. There's no point standing up here and saying, oh, we've got lots and lots of underexplored ground, if I'm back here in 2 years saying, we've got lots of underexplored ground. The point is, get out there and explore it. Regional exploration is fundamental to what we're doing. So now moving to the east, we have the Colorina trend. This is an 80-kilometre mineralised trend that extends south of Aeris's Triton operations. We have there a Helix discovery, the CZ copper deposit, 2 million tonnes at 2% copper and a little bit of gold. We have a range of regional targets, and we also have a nickel cobalt asset, which I'll talk about briefly. The mineralisation here basically is a plunging chute, but with some very high-grade copper sulfide along it, as well as some oxide material near the surface. It looks a lot like Aeris's Constellation discovery to the north. That was an EM discovery, an aerial EM discovery. And discovered in December of 2019, and here we are now, they've delineated a resource of just under 7 million tonnes, around 2%. This is the style of mineralisation that we're looking for as well in CZ. We've had to do a lot of catch-up work here in terms of some of the geological interpretation. That model is coming together now, and what we're seeing is that we have this chute that's plunging off to the northeast. There's some seriously good grades there. You can see 11 meters at 6.6%, 12 meters at 5, and that's consistently down the plunge of that chute. We did some drilling here recently, and in the surface areas, we also discovered high-grade shallow intercepts, 7 meters at 2.6% copper with some gold. And I'm really interested to see whether or not this shallow oxide mineralization that we intercepted could be another parallel plunging chute position. So along this trend, we have a heap of targets. As I said, regional exploration is really important to us. When I started, we had drought-breaking rains and a lot of active farming activity, which was hampering our access to test our early stage targets. In 2022, we had a lot of flooding rain, and crop salvaging, if you like, which was also having an impact on our exploration activities. But now we are getting on the ground, the ground's drying, and we're really excited to be able to finally get on and test some of these targets that we're looking at. Just in wrapping up, we have some significant nickel cobalt assets that we're packaging up in a holding company called Ionic Metals. We have the Homeville nickel deposit, about 19 million tonnes at 0.9% nickel, 0.06% cobalt. It's got really good grade for a laterite deposit, but it doesn't really have the tonnes. When we look in our database, we find lots of prospects proximal to Homeville with good thicknesses, shallow, high-grade laterite nickel, really exciting cobalt assays, and we're looking to package all of that up and put that into a different vehicle, probably through an IPO. We do have a sustainability platform. Modern language is ESG. It's something we grow into as our activities develop. Quick snapshot is, unusually for a junior explorer, we have around 20-25% institutional presence on the share register. I think that belies the active nature of the Cobar district. And with 2,323 million shares on issue and the current share price, market cap around $20 million. Over half of our money goes directly into drilling and over 90% goes into exploration. And just in wrapping up, because I can see that Chris is standing and I'm almost on time, what Helix offers is leverage to early stage exploration success. We've got the money, we've got the ground, we've got an excellent team, and we've got the targets. And now we're getting on the ground. So we're exposed to advanced projects and regional exploration success. Thanks very much.
Hey, Mike, how far do you actually live from the hotel?
We regularly walk up and down for a meal and a few drinks, and it takes about 20 minutes.
So after Gallagher's
It
drinks
takes 20
tonight-
minutes to come down the hill and about 45 minutes to go back up.
Yeah. So after Gallagher's drinks tonight, if we can't get a cab, we could all wander back to you. You could have paid I was at the desk last night, and there were a couple of investors and sponsors that actually rocked up late last night from interstate and couldn't get a room here. You could have been there with your swag. You could have been making a tidy little profit there as well. They had to be to send them off. All right, you. Our next presenter has been described as entertaining. He's no stranger to the stage, although he does usually have a bass in his hand. He actually plays for a number of jazz bands, very good jazz bands around Perth. Not one, but a number. He's also he's not content with speaking one language. He speaks Mandarin Chinese, he speaks fluent Spanish, and of course he speaks English, which is handy for the majority of us in this room today. When it comes to company allegiance, though, it's one company only. He is Coda Minerals through and through, although you do hold two roles with them, don't you? So you're the CEO and you are the ED. Do you want to come up here on the stage? Would you make him welcome, everyone? This is Chris Stevens, and he's going to talk to us about the prospects of Coda.
Thank you very much for the entertaining introduction. I was complaining the other day about how boring mining intros are, so this is a huge improvement. I think I'm a better mineral economist than I am a bass player, so I'll leave you to judge over the next 10 minutes. I'll leave you to judge over the next 10 minutes or so. So look, thank you very much for having me here and good afternoon. I realise that things are running a little bit over, so I'll try and be fairly quick today. I'm going to deviate a little bit from the usual slide format, largely because I've given us sort of this presentation a little bit before, and we've had one of those years where you just have to get your head down and do the work. And we really absolutely have done the work. And so the next few months are going to be really exciting in terms of deliverables. All of that hard work over about a 12, 18-month period is starting to come to fruition. And so what I'm going to do for those people who are new to the story is I will recap a little bit, but primarily I'll talk to, what we've done over the last little while and what we're really delivering over the next 6 months or so. So I'll draw your attention to the usual disclaimers and then sort of give you a quick introduction for those of you who are new to the story. So Coda Minerals listed in October 2020. We listed really primarily focused on our more advanced asset, which is the sedimentary copper cobalt mineralization. We are located in what is arguably the world's premier copper exploration jurisdiction. So we're sandwiched just between Oz Minerals and BHP, which is about to become BHP, one assumes, and we're just 40 kilometers to the west of the Carapatina project, just down from Oak Dam West and Olympic Dam as well. So it's not just neurology. Over the period from listing, we've turned 250,000 tons of contained copper equivalent into 1.1 million tons. So more than a four-fold uplift in the JORC resources, plus a significant amount of exploration success as well. In terms of the focus, this is unashamedly and primarily on the Elizabeth Creek project, which really hosts two projects in one, which is the sedimentary copper cobalt, the more advanced project, and the higher risk, higher reward, slower burn, very exciting IOCG discovery as well, which we've been following up on. We also have tenure in Cam River in Queensland and in Victoria as well. But again, as I said, the real value drivers coming here from the sedimentary copper and the IOCG, as well as the upside exploration here. Talking briefly to the corporate structure, we have a very tight structure, just 140 million shares on issue, share price bouncing around 24 to 26 cents at the moment, market cap of 36 million, enterprise value of about 29. We have $7 million of cash in the bank, so we're well cashed up. And the work at the moment is it's hard work, but it's fortunately low cost, which is also very helpful for cash conservation. The board owns a reasonably large percentage of the register, around about 15%. Keith Jones, 5% shareholder, he's our chairman. He's put over $1 million of cash of his own money into the company. The board just cut a check for over $320,000 last week as part of a recent raise as well. So all bought at market prices. It's a well-supported company. We have a lot of focus on here, and it's a fantastic team. Now, I've realized somehow the board slide has found its way to the appendix. So I'll just talk very briefly to who is involved with Coda. I know a lot of you are familiar with this already. Keith Jones, chairman, former chairman of Deloitte Australia as well. Colin Moorhead is in the audience today, one of Australia's most experienced exploration geologists. He's on the board of multiple companies, Eris, Xanadu, Ramelius, Ohio. He's also on the phone to me for on average about 4 hours a week, I'd say. And it is time which is way above and beyond the call of duty and hugely appreciated. Robin Marshall, Paul Hallam, they are feasibility and operations experts. Those of you paying attention to the first slide will realize having feasibility and operations experts is very useful when you're about to deliver a scoping study in 6 weeks' time. Now, I often say this, but never trust a company that spends half of its presentation talking about the market. So I'll spend approximately 1 minute talking about copper. I believe very strongly, personally, for my own career, for investing, and for the value of our shareholders, that copper is the right place to be. As a mineral economist, most people get supply elasticities wrong. Mineral economics is all about how fast supply can react to changes in demand. We can see the changes in demand coming. We can see electrification. This is happening, whatever your politics. And there's only one way to move that power, really, and that's copper. Deficit forecast by 2035, 10 million tons. That's roughly $90 billion at current spot price, or roughly 18 times the global traded lithium market. Copper is a huge market. It takes a lot more to move a market this big, but move it is going to. And I believe having leverage to copper is the right thing. And I believe that leverage will and can come from Coda Minerals as well. One of the reasons I'm so excited to be doing the job I do. I'm going to explain Coda's assets very simply because sometimes there is some confusion here. I did a interview recently with Matt from Crux Investor, and I think he was getting a little bit frustrated with the management consultant in me talking about all of these different pieces that come together. And eventually forced me to make it more simple. So I'm going to repeat what I said. There are two assets here at Elizabeth Creek in South Australia. The first is a more advanced copper cobalt project. 2 open pits, 1 underground. The underground is only at 400 meters. This is a good depth to be mining. Challenge sometimes, I'll talk about this in a sec, can be the time taken to get down there. The good news is we have 2 open pits before we do. So the mine plan all fits together very well. It's more advanced. There's a scoping study coming in the next few weeks. We are in the final parts of this study. The second part, the second asset is the IOCG. Many of you will know us for the IOCG. We hit something pretty spectacular in June 2021. It remains what I would describe as a spectacular technical discovery. Over 23,000 meters of diamond drilling gone into this thing. We're starting to understand it well. We're doing some more work, which I'll talk to in a moment. Ultimately, it's a very, very high reward opportunity. For me, I would be looking at Coda in terms of the foundational asset. It's the one we listed off. It's the one I spend a lot of my time working on and the team's time working on, and that's the copper cobalt. We are, in my opinion, wildly undervalued based on that alone, and there is some reasonably credible independent broker research to back that up. So what have we been doing over the last year? You know, one of the things with mining I find in exploration is that it doesn't always lend itself brilliantly to the 24-second TikTok generation news cycle that investors seem to want these days. But in the year since I last stood here, we just delivered a resource last time, 43 million tons at 1.86% copper equivalent, in addition to the JORC indicated open pit resources, which we did prior to listing. We've taken that resource. We've materially completed a scoping study. And I'd like to think this is not your average scoping study. This is detailed. Part of that is some of the complexities of the project. Part of that is because at Coda, we are very detailed people, and we believe in putting good information out to the market on a reasonable basis. You'll see a lot of 100% on this. It's effectively done, bar for some fairly material, but reasonably advanced trade-off studies on downstream processing, which I'll talk to in a second. The mining study. This wasn't easy. We had to find the right people to do this. People with experience in flat dipping ore bodies. These are not necessarily something that is mined every day in Australia, but wider in Africa, in Europe. These are very commonly mined. Once we found the right people, once we got into this, it started to move very quickly. These are good numbers. 26 million tons at 1.86% copper equivalent for total mined mineralization. This is at a scoping study level of confidence, but it is a very detailed piece of work that we've done. Getting down there takes a little while. At the moment, we're into production ore in about year 6 based on the schedule. We are currently optimizing that. We're very confident that we will improve that materially. But in the meantime, there are 2 open pit resources within the mine plan. MG14, undoubtedly, and I think this will always be the first cab off the rank. It's a good, solid, relatively high-grade open pit, starting just 14 meters from the ground, from the surface. Look at that grade, 1.78% copper equivalent from the mine mineralization. That is very, very high compared to globally mined open pit grades at around about 0.2 to 0.3%. Wind about, the more challenging of the 3 deposits, I will say. We are looking to push as much of this to the back of the mine plan, but there are 4 pits currently within that mine plan, and they can fill in some mineralization before we get down to Emmy Bluff. I call it the less good of the deposits, but we're still talking 1.7% copper here. This isn't a bad grade when you consider those globally mined open pit grades. So moving on to a relatively complex diagram. This was part of a announcement recently. Let me make this very, very simple. What this means is we know what we're doing with this mineralization from the point it hits the ROM pad. You see, I've just talked to the mining, so we know up to the ROM pad. Crushing, milling, flotation, it behaves very well. We're getting over 90% recoveries of that cobalt. In particular, the copper recovery is also relatively solid on a global scale. And then producing a concentrate. There are companies that would stand up here and tell you that they'll sell a copper cobalt concentrate and hope that you don't know the difference. but copper cobalt concentrates can be challenging to sell. We will likely sell some, especially from MG14, which has a lower cobalt content during the first year or two. But then, in my opinion, you want to be going downstream for a couple of reasons. Going downstream gives you access to future grants. There's the critical minerals grant at the moment, which we're currently applying for. There is also the ability to control your product and your marketing mix and to be a master of your own destiny. This is very important. We know how to do this using pressure oxidation. We know how to do this using Albion. We're currently finalizing a study on non-ox, which to my mind is the holy grail. This is the perfect mix of producing a high-grade copper concentrate, eminently saleable, reduces capex, and producing a downstream battery-grade product in zinc carbonate and cobalt sulfate. We've got a little bit more work to do on this. It'll be done within the next few weeks, and then the scoping study will be finalized. This is a great project. It doesn't require complex pyrometallurgy. The back-end processing remains relatively small. You've got an incredibly high value product coming in that concentrate with the cobalt. The cobalt is carolite. It's pretty much a pure cobalt sulfate. So it is pure cobalt sulfide. So it processes very readily. So I talked about the ICG. I'm just going to finish off that briefly with a couple of minutes to go. This is the spatial relationship. It's not that easy to explain, but effectively there's a huge copper system here, and the IOCG sits beneath the ME Bluff deposit. I do get a few people coming up to me and saying, oh, you're never mining at the ME Bluff deposits at 900 meters. No, it's not. It's 400 meters. The IOCG is at 800 meters. What are we doing? Well, we put 23,000 meters of drilling into this thing. We're starting to understand it, but it still covers a relatively small area. This morning, we released a whole bunch of pictures. They're pretty, not many people, including myself, will understand them, but what matters is our consulting geophysicists do. They're currently processing this work. The ANT, the ambient noise tomography, worked extremely well indeed. And we're now processing that. Tight space forward gravity kicking off hopefully next week, actually, probably ahead of schedule. And we are trying to stack the cards in our favor to understand this system. When you have drilling and geophysics to correlate against, you start to get a much better picture of what's going on. And then we will look at the best ways to commercialize this going forwards. Our focus is on the copper cobalt, but the blue sky, incredible amount of potential here, and a fair amount of our energy remains on the ICG, just for the avoidance of doubt. Some of these intercepts were fantastic. You know, you've got about 69 meters over 1.5% over 2 loads. There are a couple of intercepts well over 3%, but it remains a very live opportunity with this. There are significant additional targets across here, and it remains very exciting. So just to finish, I've gone a little bit over time. Certainly over my planned time. 3 minutes to go? 30 seconds to go. There we go, I got there. Why invest in Coda? We have a wonderful foundational asset in the copper cobalt. We have incredible blue sky in the ICG. We have $7 million in cash. We have a very hardworking team. Matt Weber, our exploration manager, will be at the booth, as will our chief analyst, Katrina. We have a fantastic board, huge amount of energy, and we're in the right place at the right time. So thank you very much.
Presentation, well done, thank you. You can see where he got his honours from Oxford. He's been at WASM, he's been all over the place. A great wealth of experience and knowledge to share. Chalice Mining, come on up and join us, sir. You are our final company to take to the stage in our second session. And taking up the story is this fella, Alex Dorsch. He's the Managing Director and the CEO. He joined in 2017, so you've got a couple of years under your belt now, Alex. He's led the company through an exceptional growth period. In fact, his leadership has been recognised through a number of awards. You got New Emerging Leader of the Year with Mining News, CEO of the Year by Kitco, and most recently by Young Mining Professionals Toronto with the esteemed Peter Monk Award. So you're being recognised for what you're doing. Now tell us what you're doing and convince us that we should be investing in Chalice. Please make him welcome.
Thank you very much for that kind introduction. Great to be at this this conference again. This is one of my most enjoyable conferences in the calendar. It's nothing like getting all the explorers together and getting all the speculators very excited. So I think this is one of the really exciting moments as far as, you know, in my limited career in the resources space. This is up there with one of those real sort of key junctures, I think, for the industry. So a fantastic time to be an investor and a fantastic time, especially to be investing in the smaller end of the mining industry. So I'll start with our forward-looking statements. I do occasionally make them. These are some disclosures and disclaimers related to those. These are available to read in full on our website or on the ASX. And given where we are here in Fremantle, I'd like to acknowledge the Whadjuk and Yuin traditional owners at Julimar, but also acknowledge their elders past, present and emerging. So who is Chalice? I think everyone knows full well what we've done really over the last few years since the Julimar discovery, but our track record really speaks for itself. We are, a combination of mine finders, but also very commercially minded people. So we don't muck around with projects. We get on with it. We drill. We move aggressively, and then we take a very strong commercial approach to exploration and development projects. Our purpose is clear. It's finding the metals needed. Quite frankly, the world does not need more commodities in a certain sense, but in commodities like nickel, copper, cobalt, lithium, uranium, there is going to be insatiable demand for things like this. So our aspiration really here is to turn our starting discovery in this new province into a whole new industry almost for Western Australia. We are ASX 200 listed. We are focused on green metals. Like I said, some of our achievements listed there. We are a strong board with a diverse mix of experience. Market cap 2.4 billion today, almost 100 million in cash as of the end of last year. The register has been the topic of some speculation over the last few months. BlackRock is the newest addition to our major institutional shareholders. We also do have a corporate now sitting at 4.9%, which is very interesting. And I guess what we see is that the institutional share of the register is growing rapidly over time. So Julimar, I think everyone knows that it's this remarkable new discovery almost on the other side of the hills, north of Perth here. It's a 350 million tonne resource at 0.58% nickel equivalent, or if you think in PGE terms, 1.8 grams palladium equivalent. Like I said, we haven't mucked around. We've got 70% of that number in indicated category. Now it is a tier 1 scale resource, so it's comparable in grade to Mount Keith or Yakabindi, for those who know the Nickel West portfolio in BHP. Except this is split into a number of different commodities. This is about half precious metals, so 11 million ounces of precious metals, predominantly palladium, and about half in base metals, so 560,000 tonnes of nickel. And most people would be very shocked to see a number of that size in sulfide form. Sulfide discoveries are typically more in the range of 20 to 100,000 tonnes of nickel. 360,000 tonnes of copper, 54,000 tonnes of cobalt. It is effectively a 20 million ounce precious metal system, or equivalent to a 2 million tonne nickel system. But it also has a high grade component to it, and that's really where the focus of the work is at the moment. There's 80 million tonnes there with almost double the grade. So obviously there's quite an interesting starter option there that needs to be investigated. And the mineralization there starts from 30 meters below surface, extend down to 700. But the overall depth, or the deepest part of the host intrusion that we know about, is about 1.6 kilometers deep. And we are still drilling, trying to find the limit of the mineral system there. So we do have a resource update that's going to be out in a few weeks. That's going to contain about 110 infill drill holes, as well as about 80 new wide space step out holes. So this is a very significant new resource, a very significant new project for the state and the company. Our strategy here is that, this is a very large undertaking. We are looking at strategic partnerships to help us develop this asset, but are also, keeping the exploration focus going, because there are literally hundreds of other potential Julimar complexes now that need to get the very first drill hole into them in this new province. So we have a growing team of geologists, we have a growing team of engineers and study professionals, and we are just scratching the surface really here on this project. The The demand for these green minerals, I think, is obvious. Most presenters would have gone through this. I think the blind spot for the industry at the moment is just how much lithium and nickel is going to be required for electrification, as well as obviously copper. I think the PGEs and I guess general development and R&D into catalytic converters is a massive blind spot that is going to rear its ugly head. I think hybrid vehicles are an obvious solution, but require even more PGEs than internal combustion engines. And platinum and palladium is a very much tight supply side dynamic. Those who are following what's happening in South Africa at the moment would see that, you know, guidances are down 20% in some of those PGE mines. And obviously Russia is a pariah state, so it's very much off the list of potential candidates to bring on new supply. So that's going to be a very interesting picture over the next year or so to see what happens to PGE prices. We are in a sensitive area. We are committed, as it says there, to strong environmental stewardship. We've already got a plan to achieve a no net loss biodiversity goal for the project. You know, we are already demonstrating the commitment. We've got very low impact exploration techniques underway in the Julimar State Forest, which obviously hosts most of the strike length of the Julimar complex. We're doing things properly, and we're also contributing to the local community. So we're already seen as a potential, you know, really strong economic diversification source and employment source for that local community. And like I said, our friends at the Uwid and Whadjuk traditional owners, they're very much supportive of what we're doing, and we've had very active engagement with over 60 traditional owners as part of monitoring activities to date. It is a strategic asset, what we've found. Australia really has negligible PGE production. Obviously it has, you know, diminishing nickel production as well. Class 1 nickel, sulfide nickel, as well as PGEs. These are very, very rare types of discoveries, and tier 1 scale discoveries of this type are even rarer again. So the Australian government is doing the right thing, supporting explorers, supporting developers, and putting, you know, money into accelerating projects. We're also getting a lot of inbound interest, like we've said over the last 6 months since the IRA Act was passed in the US. That's really sort of put the emphasis to the OEMs, the auto industry, the battery industry as a whole. They need to go out and become miners. So they are very much interested in what we are doing, and that is only going to grow as people would know. These battery gigafactories are being built, and they are looking to secure the raw materials. Even one company came out a few days ago and said, basically at any price, Class 1 nickel, so the sulfide nickel found at Julimar as well as across WA, it has a strong advantage relative to the exploding industry, if you like, in Indonesia. There's a hell of a lot of laterite being produced, and the industry there in Indonesia is scaling up rapidly, but that is pretty much constrained to, you know, really China is going to be the only customer for that material. There is significant ESG sustainability challenges surrounding NPI as well as other laterite nickel sources. So Class 1 nickel is going to be what is needed for the Western world. Julimar, on a nickel basis alone, is the 4th largest undeveloped nickel sulfide resource in Australia. But if you consider our byproduct credits from PGEs, copper, cobalt, we're up there in scale terms with West Musgrave, which has just recently been acquired or will be acquired by BHP. And then, as you can see to the left of us, you know, really it is getting dominated by much larger companies than us. People would be familiar, no doubt, with the scale of this resource. Really, that resource, 350 million tonnes, is constrained largely to a single open pit, a conceptual pit here, which, as you can see, strikes over about 2 kilometres. It's entirely on Chalice-owned farmland. We own the surrounding farmland with about 5 kilometres in all directions. And that pit extends currently down to 600 metres. But like I said, that is going to be updated here very shortly. There is about 80 step-out holes towards the bottom left-hand side of the page there that are going to be incorporated and modelled into that resource update. So expect to see growth as well as an improvement in our confidence level as well, where we've drilled 110 tight space drill holes that's going to define our first measured category resource as well. Looking at the Gonville intrusion itself, and as well as the continuation to the left there going north, the Hartog segment of the complex, this is about 3.5 kilometres of the strike length. The rigs are now really right on the left-hand side of this page, drilling that Hartog intrusion. It does appear that there's an offset, and we really sort of cracked that code late last year. Really what we're looking for in these systems is complexity. Geometric complexity is really where you can channel and focus the sulfide deposition. So really here going forward is not really about adding tons, it is about adding grade, the high grade, finding these localized high grade accumulations in the system, because obviously they can move the needle for the value of the project. Some of the recent results, as well as the northern end of the resource there, you can see there 157.5 meters at 0.8% nickel equivalent, which included 48 meters at 1.7% nickel equivalent. Quite extraordinary widths and grades. Typically, nickel sulfide intersections there, really, you're lucky if you get 2 to 3 meters. Here it is completely, that is the unique part of this project, to get such width. In terms of how we're going to process these metals, it comes with obviously complexity, more so than a Mount Keith and a Yakabindi, where you're not dealing with other metals. We have 6 payable metals here. What we're very fortunate is that there is mechanisms and processes around to achieve this. So what we're contemplating really is a hybrid between a precious metals style of processing flow sheet, which is a leach style of flow sheet, and we're hybridizing that with a sulfide flotation flow sheet. So the left-hand side of the flow sheet there really is very simple. Float the copper, and we get about 70% of the PGEs following the copper into a nice saleable copper concentrate. Beautiful product to send to a variety of copper smelters internationally. On the right-hand side, there is a lot of work to do yet to finalize this, but we're looking at avenues to get to a nickel cobalt MHP. And the reason why that's significant is because the battery customers are demanding the nickel in that form, so that then they can go to a sulfate, and then that is suitable for their cathodes. So really that's really the focus of the next 6 months is finalizing that right-hand side of that page. We're also looking at grind size as well as leaching, like we said late last year, to before we go out with our scoping study. There are 5 drill rigs still at Julimar. There's also another rig drilling about 30 kilometres northeast of Julimar complex at a target called Bajording. So we are very much getting on with regional exploration. We've got mineralised strike here of at least 10 kilometres. So we do have a gap in our drilling from Hartog down to up to Hooley there. But then at Hooley, we're getting a very nice, consistent 100 to 200 metre true thickness part of the Julimar complex, and it's exactly the same geology as what we see down at Gonville. There is obviously a lot of work to do to uncover the full scale of this 30-kilometre belt. As I said as well, this is just 100 square kilometres of our 8,000 square kilometre land package as well. So we have a very, very intense regional exploration activity level going on at the moment, and the prize, like I said, is these high grade accumulations which we know are there, and we intersected in the very first hole at Julimar. So resource update, obviously this quarter, it's scoping study this year. Really, we need to get that resource updated and reflected in our models. And really, we are a unique proposition in the market. Is really a world-class asset. Nickel copper exposures are becoming very, very hard to get. We've got a team with the track record of how to do it. And we've got a lot of growth to go. We're really just starting the process here at Julimar and the West Fuel Gun. Thank you very much.
Right, now it's nicely wrapped up. Right, after lunch, we have 17 more presentations today, 15 from prospective investments for you, 2 from our industry experts. We're going to start off straight after lunch. I think we've got Adam Myers coming in, resource specialist Adam Myers. He's going to walk us through the transition of juniors to giants, help us identify a 10-bagger. That would be nice. And we're going to finish the day, our last presentation today.
Hi, my name is Brad Gurry and I'm the CEO of Social Suite. The Social Suite's an environmental, social and corporate governance reporting platform, ESG. We're proud to be supporters of the RIU conference, and I'd firstly like to start by congratulating Social Suite customers that are here presenting throughout the duration of the conference. Black Canyon, Coda Minerals, Gallon Lithium, Galileo Mining, Helix Resources, International Graphite, and Nordic Nickel. These companies, along with 80 ASX micro to small caps, understand the importance of ESG to create long-term organisational value. The Social Suite platform is specifically designed for micro to small caps in supporting them, one, to attract capital from investors that value ESG disclosures. Two, creating revenue through responding to supply chain requests and the negotiation of offtake agreements. Three, mitigating organisational risk while building brand value. The Social Suite platform is easy and affordable for the smallest of organisations to get started with ESG. This is complemented by our industry expert ESG coaches who will help you with your ESG journey. We wish all companies and investors a successful RIU conference, and we're here to help with your ESG needs.